Just an hour ago, I finalized today's oil analysis for recording, but then the futures opened with a critical move that changed everything. It was sharp, it was fast, it demanded immediate reevaluation. That's the kind of market we are in, and that's exactly why we chart the charts before the crowd even blinks. Let's talk about the candles. Today's candle on the daily frame was very, very bearish. And well, when in the middle of the day, it was sitting at the 200 days moving average, and I thought that, wow, it might find support there, but it looks like the odds decided to move down, and this was it. Technically, this big bearish engulfing confirms a reversal on the daily frame. However, I'd like to say the 2-day frame is not confirmed yet, and the 5-day frame, which will be closing tomorrow, is also not confirmed. But if it closes with a candle like this, so this is the 5-day closing in 22 hours, it will be likely a bearish reversal, because this is a very strong dark cloud cover. If it pushes a little lower, well, it's going to be a bearish engulfing. That's the perspective for the candles, and we have technical alignment for and technical support for a move down at this moment. Now let's talk about the Elliott Waves. So this was the chart that we discussed with our members on June 21st. I was saying that most likely oil formed an impulse here, and wave 3 ending with an ending diagonal. So this was the expected move toward this rectangle, blue rectangle, and the move towards 67 or maybe lower. So this is the same chart, and what I'd like to say that oil went way down toward below the line, below the 67, ending at about 65 right now. So now let's have a look at what happened, what actually happened, and what does it mean. So this was the bullish perspective, and I was expecting after wave 4, wave 5, 3, and 4. However, this move is exceptionally strong, and I think that we need to reassess the possibility of wave 3 here, which is also possible. And now let's have a look at the micro chart. So what happened today? So this was potentially either wave 3 or wave C, as I just formed this chart and printed it for myself just for reference. And if we look at this one, I was thinking about two possibilities. First of all, is an ABC formation with this potential top, or wave 1, 2, 3, 4, and 5. But for wave 5, to continue higher, oil needed to stay above 64.695 and didn't cross this level. What happened right after the opening? So this level was crossed by just 2 basis points, and technically it invalidates the green count. Now we are looking for a red count and potentially an impulsive wave down. So this would be wave 3 at this moment, and the almost ideal Fibonacci ratio. So the wave 3 is 2.618 of the length of wave 3 is 2.618 of wave 1 here. Now we would be looking for wave 4 from this level, and I would like to say maybe we should be looking for something like this. So because oil right now is grossly oversold on multiple hourly frames, and I would expect a move higher toward this level. So somewhere between, let me mark it, somewhere between 69 and 67. So that's a possible bounce here before we would be looking for wave 5 downward. So this would be wave 5. So if we have an impulse like this, then we would be looking for a totally different structure, and I'm ready to scrap an extra bullish long-term perspective that I shared last week, considering that the oil would be able to form a very strong and huge impulse of the bottom. It looks like this one has been invalidated right now, and we would be looking for a continued move lower. Well, let's see how it develops, what happens next. This is the perspective for the next couple of days, a bounce towards this red rectangle, and then another wave down. And after this wave, we would be looking for a correction, but that's way too far to discuss. We will be looking at the longer term perspective in our midterm or in our midweek analysis on Wednesday, or video analysis, and also in our weekly reports and weekly digest. And for the last moment for oil, this is Exxon, Chevron, and ConocoPhillips. So these companies closed today with a strong bearish engulfing. However, I'd like to say it is not confirmed yet for a few technical reasons, and I would like to see a stronger confirmation on the daily and what about 2-day frame. So 2-day frame is closing tomorrow. Let's see what happens. So far the Elliott Wave structure has been broken, and I would be looking for oil to build an impulse downward. So that's a quick update on oil, and I'd like to say that as of Wednesday, June 18th close, our swing trading room remained long on SPY. Our master trader David continues to show what disciplined technical execution looks like, delivering setups rooted in candles, patterns, and momentum. These insights are part of our executive member service, offering real-time signals and well-defined trading strategies. And just to wrap things up, today's drop was expected, but it went far deeper than anticipated. Oil is now clearly short-term bearish, with strong potential to accelerate in the coming days, possibly after a bounce. While the long-term forecast shared last week remains on the table, odds are growing that it will be scrapped. We'll know more about it after the weekly and monthly closures. Don't miss our exclusive weekly video digests that cover commodities such as natural gas, uranium, corn, wheat, coffee, gold, silver, and miners, market strategy, major indices, large cap stocks. Stay informed with full access to our daily insights, weekly strategies, exclusive charts, and swing setups. Limited time offer for new members only. Visit investingangles.com or email us at help@investingangles.com to join. Like, share, and help so that the others stay ahead of the curve. We don't follow the noise, we follow the signals. This is Investing Angles.